thanks for staying awake. I think Shwetank did a very good job. If somebody is still dozing off, then I have taken some steps to ensure you're awake. Basically, three things. One, I'll be walking here up and down so that you don't get to close your eyes in one place. Second, there's a lot of text, exciting logos, colorful stuff, so that you are like not having to read too much or read yourself to sleep. And finally, a lot of numbers, big numbers, which are we are trying to drill down into some of the startups and the investments which have been talked about. But the main purpose of this session is to take a somewhat, I wouldn't say a deep dive, but at least one drill down into what's the money going into Insurtech startups, which are some of those startups, what should insurance companies look at to understand who could be their potential competitors, what are the current very small but still very interesting and well-developed ideas which have raised very good amounts of funding, and also potential partners. And I think the best is to get started. So this is the slide as a starting point, which we drill down into. So this, I think, we have seen a couple of times now already. This is a total amount of funding which has flown into Insurtech in the last 5 years. Split by property and casualty, life and health, we see almost equal distribution, but this is more owing to the funding in the US, where, again, health insurance has seen a huge amount, but in Europe, we see much lesser invested in this space. But this is just to say the scale of venture capital funding keeps on increasing over the last 5 years. Aberration 2015 due to serious big funding rounds in China as well. Where is this funding happening? So in which regions? Again, if you look back to 5 years ago, it was mostly concentrated in the US. The last 3-4 years, you see Europe and APAC both increasing their shares, so highlighting the fact that that what started in the US was also parallelly developing fast in economies like China, which again increased a lot of its share, as well as gathering pace in Europe. So this is a split by the region to say there is now, as per each of these key 3-4 markets, there is now funding proportionate to that. The models are different, the ways the companies are going to market are different, but there is space for growth. Another way to sort of make sense of this data is to look at which are the biggest funding rounds. So we'll just spend some time trying to see which are the startups or their business models or their focus areas, which are some of the dominant ones right now. So again, the caveat here is that we are looking at companies which are now really mature startups. I mean, they're still very small by the scale of the big insurance companies, but we are looking at ideas which were, or companies which were ideas 5 to 7 years ago, or at least 3-4 years ago in some cases, and are now gathering pace. So these are relatively proven companies which are now raising a lot of funding. To summarize this, about 4 or 5 of these startups are health focused actually, and as you can see, US dominates it. So I think it has more, the global largest funding rounds, at least of last year, have more to do with the big opportunity around healthcare in the US, which has followed a lot of the regulatory changes from Obamacare onwards. So that's one takeaway. The second one, if you'll see Gusto, the Root, and Cambridge, these are all related to automobile. So I think these are the two takeaways when you look at which are some of the biggest startups with some of the biggest funding rounds in 2018. So kind of a state of the union as of last year. I then brought down a bit to look at what are the startups which received the largest funding last year in Europe. Here again, if you want to look at the where is the funding going, a bit different from the US, I would say. There's still a bunch of health insurance companies, the likes of Allen, just probably, in fact, yeah, sorry. So there's a bunch of companies around auto insurance. So that's from number one, that's RIB, Right Choice Insurance Brokers from the UK. Then Nexar, which is trying to combine the not just the AI and the post-accident cover, but also trying to do preventive driving and so on with using video technology combined with AI. And then there is Tractable. All of these are focused on automotive. The others are Koya, Clark, Simple Insurance, Element. Most of these are focused on the distribution / digital insurance concepts, trying to sell insurance more digitally compared to before. Right now, just one pure, I would say, AI company focused on insurance in this list. But then again, most of the others are using that technology under the hood. So again, I don't think any of these talks about using blockchain. So just going back to the blockchain and AI discussion, right now the money is very much into using that existing or new data or a combination of internal and external data to make more smart and less costly insurance. So I'll close this part of the session just by summarizing using this very nice slide from the last 5 years. So this is basically the big funding rounds of the last 5 years across the world, just to give you a feel of what has happened, which have been the biggest funding rounds in the 5 years. So Zhong'an is the competitor of Ping An, which was recently mentioned. It's Chinese. BGL is very much a UK-based company, automotive. Cambridge, which is one of the last year's big funding rounds, another automotive. And then you see a bunch of Oscar fundraisers, which is health, and another set of smaller companies, mostly focused on health / employee benefits, automotive. I think that's the takeaway from this slide. Who's investing? So who's putting all this money? As I said, so of course VCs, but increasingly a lot of corporates and incumbents, as you will see. So I don't think you will know many of the VC players, but you will definitely know a lot of the corporate investors. Most of them started investing around 2014-15 was the first, were the first funds. But by now, I think almost every top 10, 20 European insurer, I think almost all the top 10 US insurers, they all have a venture fund. In fact, the top 10 would, I would say, have a complete set of initiatives ranging from internal innovation labs, partnerships, venture arms, M&A, corporate development. So they are like going for it. And where is the question? So in what areas? So this is another different way to look at it. We looked at one study of the top 100 Insurtech firms, and which are these firms? So out of these 100, how many are looking at which type of problem or technology that they use for this solution? So a lot of them, 68 out of the 100, are looking at customer-centric improvement, which again, we learned time and time again, that's one of the biggest challenges right now. Then distribution channels is the second, analytics and artificial intelligence is third. So just to look at where is which technology or which area of spend is the money flowing in. All good? Good. So let's look at a bit where is the money flowing in by stage. So right now, in the last, why did I say who's still investing? So there was actually a drop in the number of transactions in the last couple of years. There was more investment going into some of the more mature startups and less into seed and Series A. But the main takeaway from here is, one, as the startups mature and some of the bigger investment funds, especially the corporate VCs, the insurance VCs, they started to get a bit frustrated with the early stage, so that's normal. I guess Shwetank said try to establish a process. How do you go about doing that? It's not easy for big ships to interact with these small speedboats. So they do get, some of the earlier started ventures of big corporates, they started to look more at things which can move the needle, so looking at investments above 10 million, 50 million, and so on. So a lot of them, including Allianz, for example, Allianz X was earlier looking at very early stage, learned from that for 2-3 years, but then 2 years ago decided, this is not worth our time. We do that by using fund of fund strategy or something, but we ourselves will focus on big 50 million plus or 20 million plus type of investment. So that's the other reason why this is going more towards later stage. And more corporates and incumbent insurers are involved in these investments, increasing trends, and more than 40% of the deals last year, for example, had at least one incumbent insurer participating in the funding round. So, which actually brings us to the other part. In a lot of the other sectors, so fintech or retail, it's been relatively, or e-commerce, for example, was very, very VC-driven, so independent VC-driven. Everybody says, of course, it's hard to be an Insurtech startup without understanding the sector, and I guess also hard to start off without the, the risk behind you covered by an existing brand or covered by an existing insurer. So that reflects in this. A lot of the startups do look for corporates to join in so that they get either the scale or the distribution or the risk underwriting. So I'll now move to a bit of I'm just going to take one part where I have personally spent some time trying to understand what's going on, trying to look at what's going on, especially in the European market, and some of my own initial understanding, I would say. I haven't spent, like many of you here, 20 or 30 years in insurance. I've just spent 6 years focused on the fintech and insurtech startup scene, but trying to understand what's going on, trying to pick your brains as well. So this is what I see. First of all, just to look at life and health, which I use as a spotlight. Left-hand side is a set of investments. As you can see, just about 1 or 2 in Europe. So most of this is happening right now. The biggest ones have happened in the US, or you can see 1 or 2 in Asia. Europe, this is one of the less explored markets, so this is still coming up. Not too much has happened in the space. If we look at where we come, I mean, SixThirty itself, we are not looking at this. You saw some of the big numbers because we just wanted to get a feel of what is going on in the overall market, who's moving the market in the startup space. We look at very early stage, so it's a lot harder in terms of looking at what could be the market in 3 to 5 years, whether the guy we invest in would understand as the market is changing and change his startup and business model and so on. So we invest at a very early stage between 250K to 2 million. So where are we looking at startups in Europe, EMEA, Turkey, etc.? What are we looking for? So we look for startups which have initial customers and revenues. We look for addressing, especially focused on the life and health space. We look at companies which can address data, which can get insights out of existing data, plus combine external sources. Second, we look at distribution, enabling distribution, and finally customer engagement. So I think there was a very nice graph about how there's only a snapshot available in the beginning and then at the time of the claim, but what happens in between? So that's definitely a challenge and therefore an opportunity which startups could address. I think that Yas.life, I think from Yamil was a good example, something like that where there is customer engagement and therefore more data to be able to benefit both the customer and the insurers, models like that. I also saw a lot of, the way fintech was looking 6 years ago or 5 years ago when I kind of started focusing full-time on this space, there was a lot of excitement about being able to disrupt and being able to create e-commerce style B2C scale. That has happened, I would say, only in a handful of cases. In most other cases, it has been very hard to scale, and in Insurtech, I see that's even harder. Sometimes I find, of course, Yes.life and the models around that, which can get customers engaged to the extent of, I mean, not to the extent of, but on the lines of Pokemon Go, etc. I mean, that is the dream. Excellent if we could do that, but I found a whole lot of challenge in trying to do that. I still look for YAML, trying to understand how far that has worked in terms of what coverage of the full customer population can you get, with an app which is relatively more of a millennial or a younger crowd, but how do you cover the rest of the aging European market? And then I tried to look at some of the bricks. So what I mean by bricks here is basically in Europe or in a lot of Central Eastern European countries as well. I felt there is a lot more opportunity for companies, startups, to look at existing points of, you cannot just ignore the fact that there is an existing health and life ecosystem, especially health ecosystem. There are places where you have to go to be able to get medical assistance or to get better, or when you are aging, then go to an elder care home. So we are talking about going to the doctor. We are talking about going to the diagnostic center, not in Germany, but probably elsewhere, France, for example. Then going to the elder care home when you're old and staying there, etc., etc. And all of those are basically points of interaction, which I don't see that they have been used to the fullest extent. So people are going there, they face the resistance there, they have to wait at the doctor's place, they have to wait or get diagnostic from the diagnostic lab and don't understand what is written there, and then they take that to the doctor. They go to the pharmacy and they don't get anything beyond just the medicine, maybe some light advice, again, something of that sort in Germany. So, but this I see or look at as an opportunity, and see some startups who are looking to build that bridge from existing brick pain points to digital offerings. So that kind of ability to move the existing consumer onto digital to share their data, I think can be more easily accomplished by using some of the existing bricks. That's what I meant. Plus, we look for European-specific market opportunities created by things like PSD2, which forces all banks to share their customers' account details if the customer asks for it. So this is just like open banking. We see also the opportunity for open insurance, combining that with bank assurance, etc. So that's another line of thinking, how we, our perspective on what we are looking for investing in the market. That's the crux of the presentation. This is just I think somebody was saying 660 or whatever, so this is why we call, the reason it's called 630 is because there's a gateway arch in St. Louis, kind of a gateway to Western US, which is 630 feet tall, so that's the reason behind the name of 630 Ventures. These are some of our strategic partners. And the startups we invest in then also get assistance trying to get into the US market and scale up there. Etidot, who presented here and still are here, are one of our portfolio companies, but yeah, these are some other examples. I'm done, actually, so I have 1.5 minutes. I'm happy to take some questions, if you have, and if you have still stayed awake.